In this weekend video, I'm going to take a look at all the markets, where we're at, where I think we're going. Start with the stock market, the S&P. Um, in one of my previous videos, I think I noted that we had broken the intermediate trend line, which would be right around in here. That was, confirmation that the intermediate cycle had bottomed, and we were now in the advancing phase of a new intermediate cycle. That is, at this point, I'm 99.9% convinced that is true. So the next resistance zone we're going to see is this 10-week moving average, and I've noted this before. In order to confirm, or one of the final confirmations that an ICL has occurred, is that price will regain the 10-week moving average and either go far enough above it or hold above it long enough to turn that average back up. So this next week, potential to maybe tag this. I don't know that we're going to get through it on the first try. So I would think by the close of next week, we'll probably still be below this 10-week moving average, even though intra-week we may move above it. We're only 2 weeks into this new intermediate cycle, and I'm seeing, of course, all the usual perma bears are looking for a move back down, and this is why I use cycles, so I don't make these kind of mistakes. Even if we were in a long-term bear market, and by that I mean a bear market that was going to last a year and a half or 2.5 years long, which I don't think there's any possibility of that. But even if we were, you're not going to get an intermediate cycle that tops on week 2. It's just not going to happen. Even in that scenario, the advancing phase of the intermediate cycle would still run anywhere from 8 to 10 weeks. So to try and call a top in 2 weeks just shows that these analysts don't understand how markets work. They don't understand cycles, and they make these mistakes at every turning point. They're forever looking for the next shoe to drop. They're waiting for a repeat of 2008, and we're just not in that scenario right now. And even if we were, we would still have at least 6 more weeks to maybe even 8 more weeks before this intermediate rally here would top and then move back down again. All right, moving on to the Nasdaq 100. We did tag that 10-week moving average this week. The Nasdaq has been leading, and that's not unusual during a bull market. Tech usually leads. As I've said before, secular bull markets are driven by an innovation cycle. We are in one right now. We have been in one ever since the bottom in 2009, and we're not done yet. So we made the first test of the 10-week moving average in the Nasdaq 100, and I don't think it's out of the question that the Nasdaq 100 could close above the 10-week moving average next week. And then the semis, and this is the leading sector of this bull market. This is the sector that's going to benefit the most by the integration of artificial intelligence into human society. And so as long as the semis are healthy, then the bull market is intact. And as you can see here, the semis did poke briefly above this 10-week moving average. So the same thing holds here. I think there's a reasonable shot that the semis could close above the 10-week moving average by the end of next week. Now I want to briefly take a longer-term look at the semis. I've noted this many times in the past. This was the bubble high, the 2000 high. We tested it multiple times here. We're not able to get above it, and then we had the corrective move down into the December of 2018, and then the breakout. And as I said in some of my previous videos, I was kind of expecting this breakout to be retested. That is exactly what we have done. Semis have come back down to retest this breakout, and now we've bounced again, and as of the close on Friday, we're back up here at 1600. So you know, a textbook case of a breakout retest, and now I think we're on our way back up. I you know we may or may not have to retest this breakout again in say in June or July at the next intermediate cycle low. It will all depend on whether or not politicians come to their senses and restart the economy quickly. If they do, then we're off to the races, and we're never looking back again. If they continue with these insane, stupid decisions and try and keep the economy closed longer than it needs to be, then yes, we will most definitely retest these lows again in sometime in early summer. Hopefully they come to their senses and we get things back up and running quickly. All right, moving on to gold. As I had noted, we did the bare minimum here to confirm an intermediate cycle decline. I mean, it didn't last very long, only 2 weeks, but it was long enough to turn this 10-week moving average back down. Clearly, it did break the intermediate trend line. So, we filled the parameters required for an intermediate cycle low, and now price has rallied back above the 10-week moving average, and the moving average has turned back up. So, in my view, that we're probably done. This is a final intermediate cycle low. We're only 3 weeks into the advancing phase of this intermediate cycle, so kind of the same situation as the stock market. I just don't see any reasonable expectation that this intermediate cycle would left translate and move back down quickly. I expect this to right translate with all the QE that central banks are dumping into the global markets right now. So, I think at least 10, maybe even 15 more weeks before before the advancing phase of this intermediate cycle tops. Now, let me take a longer term look on gold as well. All right, so we've got major resistance here at 1800. That's only about another $50 in gold. We're starting to get semi-mature in this daily cycle. I believe we're on day 19. I think it's going to be on Monday. I really doubt that gold is going to push through this kind of resistance on the first try, especially with this daily cycle getting mature. So, if you're long or leveraged long in metals, you probably want to lighten up or get off leverage when gold hits this 1800. But it is early enough in this intermediate cycle that I think there's a reasonable chance that after a pullback, maybe even $100 pullback to 1700 from a tag of 1800, that we would then break through that resistance on the second daily cycle and probably test the all-time highs. So I do think we're gonna test these all-time highs sometime this year, maybe maybe early summer, or maybe we have to wait till in the fall. But I do think we're going to test these all-time highs here, and this looks like a big cup and handle pattern that's forming. So I would expect a test of this is going to trigger multi-week corrective process that would form the handle before we could then get a breakout. But the fundamentals are in place for gold to finally break out of this and give us the next leg up in the bull market. We've got QE to infinity with every central bank. The bankers' attempts to cap the gold market are failing. They're caught in a short squeeze. Just more fuel for the fire. And I don't think they're going to be able to escape those short positions they're in, other than to just cover into a rising market. They've created shortages in the physical market, so I don't see how there's any way out for them at this point. I think they're just stuck, and I think gold is going to test these all-time highs, and I think it's going to break out above these all-time highs, maybe this year. And then finally, oil. I tend to think this is probably a final bottom, but I'm not convinced that oil is ready to give us any kind of upwards trending move at this point, where there's just too much indecision with the price war going on right now. This could just remain stuck going sideways as this 10-week moving average comes down to meet price. So while I tend to think we're probably done with the correction, I doubt that we're going to go any lower than this. I also don't know that we're going to get anything that's tradable. A strong move higher that that you could make some money off of. This may just be kind of a whipsawing market for a while. So I do think oil's probably bottom, but I don't know if you're going to make any money off of it in the coming weeks. All right, so for the rest of the markets, the key to remember is that we're still very early in the intermediate cycle in both gold and stocks. I think there is good money to be made in both of these sectors over the next 8 to 10, even 15 weeks, because I don't think there's any reasonable expectation that these intermediate cycles are going to left translate quickly, not with the trillions and trillions of QE that's being pumped into the markets. And almost certainly the coronavirus is what's topped just about everywhere else. And clearly it's also topped in New York City, which is the worst hit here in the United States. So for the rest of the United States, it's probably going to top next week. So I think that's slowly going to go away. And then it just boils down to how quickly politicians can come to their senses and restart the economy. If they do it quick, then we'll be done with this. This was a 4-year cycle low. We won't need a retest of this bottom, and we'll start the second leg of the bull market. If they continue to be idiots and they keep the economy on lockdown much longer than need be, then absolutely yes, we're going to retest these lows again in June or maybe early July.